Welcome to the Banco Roundtable in association with VTB Capital. Our topic today is Russian corporates in the global capital markets. I'm Philip Alexander, the finance editor of the Banker magazine and your chair today. And we have here a distinguished panel representing investors, issuers, and intermediaries. And I'll let the panel introduce themselves, starting on my left.
My name is Chris Parks. I'm from M.Vido, working in Russia, originally Canadian.
My name is Alexey Zabotkin. I'm head of investment strategy with VTB Capital Research.
I'm John Edwards. I'm senior manager for CIS business development at the London Stock Exchange.
I'm Andrea Hosso. I'm the portfolio manager for Investec Asset Management's emerging markets global corporate debt portfolio.
I'm Jochen Wermuth, founding partner and chief investment officer of Wermuth Asset Management.
Well, I'd like to start the discussion today looking at the financing conditions for Russian corporates at the moment, and in particular, obviously, the bond markets, both foreign debt and also local currency debt. I mean, we've recently seen an issue from Russian Agricultural Bank of subordinated debt. I think that was the most recent issue. I mean, maybe starting with you, Alexey, are conditions robust for Russian issuers in the debt markets, or are some of the events either in Russia or the global context, things like concerns over Eurozone sovereign debt, affecting appetite for Russian issuers?
I would say as far as the debt market is concerned, actually, indeed, it was very kind to the not only the Russian issuers, but to the corporates around the world. Partly that is thanks to the US Fed, which keeps the interest rates low, together with quite a few other central banks in the world. Especially if we look at the situation since the middle of last year, when inflation started to climb back up in Russia, the real interest rates for the Russian corporates have significantly reduced. Actually, for the prime borrowers, for the blue chip companies, the real interest rates are essentially negative at the moment, and that actually calls for indeed very, very robust and favorable conditions in the debt markets. Since the beginning of the year, we had something like ₹500 billion of issuance in the local paper, and another something like $9 billion of Eurobonds placed, which is 30 to 40% increase on the pace of issuance in the previous year. So indeed, so far the noise which is coming out of the pockets of instability globally did not really affect the credit conditions, but I would say the situation in the equity market is more precarious, and actually that is at the moment the preferred way of or preferred choice of financing for the Russian corporate world.
And Andrea, bring in the investor view.
Yes.
I mean, is Russian corporate debt, how is it seen relative to other emerging markets? Is it seen as relatively insulated at the moment, or are there still sort of risks on the horizon that you're looking at?
I would agree with the previous speaker that actually emerging market debt has enjoyed an extraordinarily good period in the first half almost of the year. It's been an excellent market for EM issuers. For global conditions are still quite favorable. There is a lot of liquidity in the market chasing yield, and therefore the whole emerging market asset class has experienced a very good run and considerable tightening. There has been a bit of softening lately, but I would say that's almost because there has been such an excellent market for issuers. So if you put Russia in that context, basically they've experienced the same thing as all emerging market issuers: excellent market, very good conditions, very often prices absolutely tight, so not much concession given to buyers and investors. And of course, Russia is a big market, so they enjoy the advantage of being big, of being liquid, of the well-known issuers are introduced in the market, so investors are more ready to buy into a Russian big corporate issue than in another market, which is less liquid, like less big, less well-known. So I would say it's been excellent for them. And what happens in the second half of the year? Well, there are lots of unknowns, obviously, including big question marks in the world, like the US debt situation and the Eurozone problems and so on. It's very difficult to foresee, but perhaps because the whole asset class has tightened so much, perhaps we can see a little bit of selling off at some point, just because investors will be prone to take profits.
And Chris, I'd like to touch on the funding strategy for your company. I think you issued a ruble bond back in 2006 that was
Yes.
fully paid off. And would you see tapping the bond markets again in the future as a possible source of funding? Is there sufficient funding out there from sort of bank loan sources?
Well, for us, we're usually in a net cash position, so we go into debt for just short periods of time. So we use short-term debt as our preferred mechanism. However, I think that for most companies that are like us, it becomes a decision. First of all, we're a ruble-based company, and we should be going and tapping the ruble market, whether that's a ruble debt or a bond debt, depends upon how long you need the money for and what sort of collateral you're going to have and what sort of interest rates are out there. I think that many of the companies would like to look into the bond market because there's very little collateral on it and the debts trade. So the problem with it is smaller companies tend to be seen to be very risky. And because of that risk, the interest rates are very high. The bond market itself, when we did it, you set the rate, you set it for a year, and then the next year you have to set the rate again, depending upon what the markets are expecting. When we went out to the bond market, we set our rate, and then we did an IPO the next year, so we didn't need the bonds to be out there. The market was expecting the interest rates to go very high. We kept the interest rates low, so the holders came in and redeemed it. And I think that for companies that want long-term financing, unless the bond market is going to say long-term financing at rates that you know upfront what they're going to be, you're too at risk when you have to go to whatever the market is going to state the risk or the rates are in the next year or the next year after that. And trying to get bank funding when you're already leveraged is more difficult. So as a corporate, I would say that it's better to go to the debt market for long term, because then you can fit that into your cash flow forecasting, you can understand what it is, and you can understand the cost. With the bond market, if we could do it, I think one of the reasons that people did the Euro bonds was not just because of the lower interest rates, but because the rates were stabilized for the whole period of the bond.
I mean, that touches on an important point there, Andrea. You mentioned the appetite for blue chips, Eurobonds. Are people willing to take risks a little bit further down with sort of mid-cap issuance as well, or is that still seen among foreign investors as, you need to know what you're getting into?
It really depends on the type of investor in question. Some time ago, people would only consider blue chips, and in only certain countries. Russia was obviously one of them. Now, the emerging market corporate debt asset class has become an asset class because there has been a lot of issuance, and as I mentioned, there is a lot of liquidity in the market and there's a lot of search for yield. So yes, we see a steady climbing down the credit curve actually, and more investors becoming knowledgeable about not only the top surface of the market, the large blue chips, but the mid-size or less big, large corporates as well. And they are willing to go down in credit rating and a little bit of credit quality as well. And if they do the work, a lot of credit work, the groundwork, and they know their terrain, then actually you can find excellent companies as well, and you get the pickup that goes with the lower credit rating. So I would say yes, definitely, this is happening. It's becoming a more liquid and deeper and better understood asset class. It's gradual, of course, so there is still a way to go.
I think that, of course, Russia has a great currency advantage. One could buy local currency and hope that appreciation will finally happen. So I think that's attractive. And I also think that if only the Russian bond market would have longer duration, it would become more popular. And of course, that's why the government is trying to get inflation down. Unfortunately, they've resorted to, believe it or not, Soviet methods, like let's fix the gasoline price, and surprise, surprise, there's a shortage of gasoline in Moscow. Let's forbid exports, surprise, surprise, there's a shortage of production. So once they get over this Soviet hang back and come back to monetary policy, tighten monetary policy, see lower inflation. Hopefully we'll get much longer duration. But I have to say that the appetite that we saw in case of one of our issuers, Wild Orchid, for even a $40 million local ruble bond with a very, very low credit company with a terrible structure, documentation only in rubles, there was great demand at the time. Unfortunately, the bank said, can I please throw in a put option at October 2008? And the CEO of the company took it without telling the supervisory board, which wasn't helpful. So, but even that company is now going through restructuring and hopefully comes out healthy. So the markets seem to be very friendly.
And just coming back to something you touched on there, Jochen, which is the question of restructuring and liability management. Historically, the track record in Russia, the sort of success rate of deals to actually stick and to get creditors to agree wasn't great. We have seen a number of deals recently over the past couple of years that have worked out, and obviously Rusal was a sort of huge deal where, you know, creditors were kept on board and an agreement was worked out. Do you think that, I mean, investors generally see sort of progress in terms of how Russian companies handle liability management and their relationship with credit investors?
Well, I think it has to do with the overall reputation of the investment climate of Russia. And I think the recent case of BP Rosneft coming to an end on the basis of a contract that was honored, that's sort of good news. If contracts are honored more often, that's great. We're seeing some progress in the local legislation for creditors to be able to enforce things, but also I think we're learning, or investors are learning, that sometimes, you know, you end up buying a bond of an entity that has no asset, right? And I mean, often the investors are quite silly, to be honest. I mean, I wasn't part of the great structure of Wild Orchid, but it was fantastic. The bondholders owned nothing, you know, so. You know, they could default all they wanted. The company would continue to live on forever. So it was only because we felt you should behave yourself that we sort of took care of them. But when people were just sloppy in investing because there was such a rush for yield that nobody cared. So I think it's a two-way street. It takes two to tango. One, it needs a stupid investor to buy a stupid structure. And then on the restructuring side, I would think that eventually people have a memory, especially in the credit markets. So I think it pays to do well. And I'm very happy in some sense that Russia has the 98 crisis, the 2008 crisis, and you can now distinguish between the people that have a conscience and those that don't, right? It's 98, the Russian government defaulted, but Moscow City, for example, kept on paying. You know, Alrosa almost.